Folks, did you hear? Roaring Kitty is back. Yes, folks, Roaring Kitty from AMC's meme stock is back. And wouldn't you know it, the stock is up like 80%. And I think it was even halted. Yes, folks, I don't know. Let me know in the comments below. Did you see the movie Dumb Money? Olivia and I did and was entertained. Pretty wild to kind of take a look back at what happened with the meme stocks. So yes, folks, Roaring Kitty is back. He is back on X, and of course the stock rips. It'll be interesting to see where this goes. But more importantly, let's talk about the economy. Let's talk about the week ahead because we have some very important things that will be market moving. First, let's remind you we have three important reports. It starts tomorrow with PPI. Then on Wednesday, we will get CPI and retail sales. We're going to find out if inflation's a problem this week. I don't really think it's PPI. I actually think CPI has a real risk. If you watch yesterday's daily financial news, you will know that the expectations are that CPI headline and core will go down. I have looked back at the past readings, and there's this thing called base effect. Basically, you take 1 month off and the new one comes on in the series, and we are about to drop a rather small number. It just feels to me that the market is set up to once again be disappointed on inflation. I think also equally important, and I don't think I've said this in a while, will be retail sales. Retail sales is how we figure out what's really going on with the consumer. We have heard about brands like Starbucks, some higher end brands like Lululemon. We've heard in like onesie twosie information, but on Wednesday we will figure out what's going on with the consumer. Where are they still spending? What are they not spending on? Is it still travel and experiences? Is it stuff? Wednesday is going to be an important day. And again, if we see inflation, even if inflation is flat month to month, where the market is expecting a dip, it could get real interesting. And then on top of that, don't forget we have 11, one of them being Jerome Powell. We have 11 Fed speeches this week. It will be very interesting to see who is dovish and who is hawkish. Right now, I still think we have two Fed presidents that are at least mentioning rate hikes. I wonder if that changes Wednesday. What do I mean? If I'm right and inflation is flat, which is above expectations, will more Fed presidents come in and at least talk about rate hikes? We're going to find out. It's going to start tomorrow with PPI. So again, very, very busy week. I will highlight for you that there's more and more economists, this time Mark Zandi, who are coming out saying the Fed should be cutting right now. Yes, according to Mark Zandi, something is going to break. The Fed is risking a nasty recession. Bank failures, if they don't cut now, cut immediately. Zandi wants the rate cuts. I have the notes over here. He thinks, however, that the Fed will wait 2 or 3 months. I don't know. It's going to be a messy week. And again, this is all of this information is coming together. Well, this week is going to be important. And I actually think retail sales, as I'm talking to you, is probably the most important number of the week. That's odd, right? We've been in this environment for quite a while where it's inflation. I think when you look at inflation and you understand the math of shelter, it's coming in. It may not be this month, but I think it's retail sales. And I think if retail sales disappoints, like last Friday's consumer sentiment, which was ugly, we could be on the cusp of something. So again, we'll talk about that Wednesday morning because it comes out at 5:30. We will talk about that. Folks, as you heard yesterday, we announced a school community called One Rental at a Time. We've already scheduled 2 sessions. I just added a third this morning, Thursday, 6 o'clock p.m. Thursday, 6 o'clock p.m., we're going to have an open discussion. As always, I don't know what I'm doing. However, I want to hear from the community and the students and really figure out what would be important to you. What do you want to see? What we can add? What's a good time for our schedules? What other stuff can I load in there? So if you want to be a part of that Thursday session, you will need to be a student. I'll put a link below for the community. You can find it in yesterday's session as well. Again, this is important, and I've added 3 sections. If you are a student already in there, thank you very much. I would love for you to answer, what is your buy box? Tell the community what your buy box is. Number 2, tell us about your first deal and all the lessons you learned. I just wrote up our first deal, Norris Drive, which is 20 years ago. All the lessons Norris Drive taught me, I put that in there. So again, let's get the community going. Let's put some information. Let's get to know each other even more. Alrighty, folks, I don't know if you've heard this, but President Biden would like to give first-time home buyers $400 to buy their first home. $400 a month for 2 years. Can we please stop stoking demand for entry-level housing? Of the entire market, the entry-level clean home is like a unicorn. And if we want to throw $400 of free money, you have no idea where prices will go. I reached out to Matt, the mortgage guy, late yesterday. Thank you, Matt, for getting back to me. Did you know $400 at 7% mortgage rates means that you can pay 60 grand more? No, sorry, that's wrong. No, yeah, 60 grand more. 60 grand. So what would happen? Just ask yourself a simple question. You got this extra $400 money coming in that's free. You're in a competitive bid situation for the perfect home. What do? Well, you got 60 grand in buying power. Why not throw that in there? This could be the most ludicrous plan I have ever heard. The only people that win, home builders, they will clean up. And boy, they're not lowering prices. They're not going to lower prices at all. Home builders and existing homeowners. Folks, if this $400 thing gets approved and actually comes out, the only winners are people that already own. It's wild. Wild. Can't believe it. Folks, I don't know if you've heard this, but the wonderful Jen T, yes, Jen T, good morning, set up another interview with Joseph Wang, the Fed guy. Jen is always out there looking for us to get great guests. We all owe her a debt of gratitude. Jen, you are amazing. Thank you for doing all that you do for the entire community. So again, folks, this is not how you fix housing. You don't fix housing by giving people free money. Have we not learned anything? That free money leads to inflation? This could be the dumbest housing plan I have ever heard. Next up, let's talk about something that I think we're going to see a lot more of. Squarespace. Squarespace is going private. What does that mean? Squarespace goes public. What is happening now is in a $6.9 billion deal, Squarespace, he said slowly, is going to go private. Why would they do that? Well, in those situations where you have to fundamentally change the business, where you may have to make some hard calls, you do not want to be under a 90-day quarterly clock. Going private removes pressure from executives to deliver quarterly numbers. If Squarespace is going to fundamentally change, then they have to go private. right? Otherwise, the market would not appreciate very likely what they are going to go through because the quarterly clock never stops. I actually think we're going to see a lot more people go private as a way to rejuggle their balance sheet. Folks, I don't know if you saw this, but yesterday at 5 or 6 o'clock, we released the WealthCon presentation. I want to thank Ryan Pineda and the entire team over at WealthCon for giving me the high resolution recording of my presentation. They also gave me permission to publish it and share it with you. They don't have to do that. They didn't have to do that, but they like what we do at the community. Ryan has been on the channel many times and he said, Zuber, for you, you can have it. So if you want to see my actual presentation from WealthCon, it was loaded last night. You can just search WealthCon. I think I put that in the title. If you do watch it, let me know how I did. It is always tough. When I think there's 1,000 people there, 900 people. So let me know what you think of that presentation. I thought this was interesting, and I'm curious. According to, I didn't write down who I got this from, my bad. I think this was a Yahoo Finance article, but don't quote me on that. That might be wrong. But apparently 50%, 50, of Americans feel they are in worse shape, financial shape, than 5 years ago. I would love to hear from my community. Are you in worse shape financially now or 5 years ago? I'm going to guess, just a wild guess, that a lot of the folks that follow my channel understand and appreciate that inflation's a feature, not a bug. A lot of you likely have bought some assets. So I'm going to guess that most of you are better. And some of you are a lot better off today than 5 years ago. So I'm just curious. Leave below better, worse, whatever you want. I just want to go ahead and check. All right, we got a bunch of people saying better. You guys rock. I know this is an awesome community. All right, what else do I got here? Oh, everybody's talking about affordability. You guys are all way better, man. You guys are great. That's awesome. So affordability, 2024 affordability is like 1984. 1984. Yes, folks, by the way, again, remember that lovely 54-year spreadsheet. 54-year spreadsheet told us what was coming. And again, just for the record, 1981 is still the worst housing affordability of the last 54 years. Again, affordability is price, interest rates, and income. A lot of folks like to talk about price and income, and they forget rates. Affordability, once again, is price, rates, and income. 1981 is still by far the worst affordability on record in the last 4 years. So again, folks, thank you for being here. You are amazing. If you want to join the school, One Rental at a Time community, I will put a link. We've already got 2 opportunities for you to listen, one with the millionaires on Wednesday, one on Sunday, and of course, the brand new 6 p.m. this Thursday, there's a Zoom call. You just go to the calendar, just an open discussion, figure out what we can do together. And yeah, I look forward to seeing how we can all grow and get better together, folks. You're amazing. Take care. Like, subscribe, comment. Talk to you later.